Guys, how you doing? I'm Ryan Mack. Welcome back to Trade Guys. If you follow my channel and all the kind of fundamental information I post out each week, you will know that usually what I do is on a Saturday or a Sunday, I go through a weekly fundamental analysis. Now, because we're now in the office in the studio, I've got a new interactive TV so I can kind of deliver it a bit better rather than just recording my screen. We're now going to be doing that on a Monday, and it's because the office and studio is closed on a Saturday and Sunday. All right. If anything ever happens where there's a bank holiday on a Monday or something, I will then, on that occasion, revert back to doing it on a Saturday or Sunday and just recording my screen as I go through it. Okay. But now we're going to go through the weekly fundamentals. Now, what we do is normally you'd have a notebook. Let's say this is your notebook for now. What you're going to do is take a notebook out, right up here. Trades, you can write fundamentals, you can write economy strength, you know, whatever really you think is relative. I just write trades, right? Here on the left hand side, you're going to write strong. Here, you're going to write weak. And here, you're going to write neutral. Now, I know logically I say it in every video, but you never know who's watching my videos for the first time. Logically, you're going to look at that and say, why is it strong, weak, and neutral? Why is it not strong, neutral, and then weak, which would make more sense? However, there is a method to the madness. There is a reason why we do this, okay? It's because what we're going to do is we're going to go through each economy's fundamentals and we're going to label them a strong economy, a weak economy, or a neutral economy. Once you've wrote them all out, what you then do is you put a cross through anything that's neutral and you simply ignore it. You then look at a strong economy and the weak economies and you match them up. And that is how you choose what you're going to be looking to trade that week in terms of one strong economy and a weak economy. That's what's going to give you that uptrend, the solid move to the upside or the downside, whether it's sells or buys, okay? So this is how we work out. Hey, sorry. If you've ever wondered, you know, how do you decide, how do you know what to trade? I mean, if I'm looking at GJ, how do I know if I'm looking to buy it or looking to sell it? You know, when I look at the screen, I want to buy it. When I talk to my mate, he's looking to sell it. Why are we wrong? You know, there's multiple different variables for that. It could be that you're a swing trader and he's a scalp trader, which happens very often between my business partner and I. He's a scalper, I'm a swing trader. I'll be in a pair looking for buys and he'll be posting in the group, right guys, we're looking to sell this, you know, and I'm like, sell it, I'm looking for buys. But the point is, none of us are wrong. He's looking to sell from here down to here and I'm waiting for the market to come down here so I can enter buys and take it long. You know, so both of us are right, even though we have different ways of viewing the market, okay? There's 100,000 ways to make money in the market. I am not saying by any means mine is the be all and end all. You must copy me. Do whatever they fucking like. If you have a method which works for you, fucking crack on. I don't care. That, you know, I'm happy that you have a method that works. I'm just here to simply share education on the likes of fundamentals, data. So this is fundamentals. This is fundamentals. This kind of stuff is more data based. All right. You get loads of information on here. With the likes of banking data, you can see what retail traders are in, if they're in buys, if they're in sales. You can see what large institutions are in. This is called Prime Market Terminal. Phenomenal piece of kit. I love using it. It's really, really good. You don't have to use everything on here, but it does help. Look, let's have a look at, so COT is a commitment of traders. This is banks. So banks are in sales right now, Euro USD predominantly. Let's look at retail traders. Yeah, so they're also in sales right now, right? So what you're probably going to see in the market is, even though predominantly COT is in sales right now, you're probably going to see it come back up. They'll take some profit to make the market, kind of, you know, push the market up slightly. Retail at that point, once it breaks a certain point, they'll be like, oh, look, it's broken my supply or, you know, my demand area, blah, blah, blah. They will then enter buys. This will change to predominantly buys, and you will see a switch here. This green and pink line, they will cross over. It's fucking beautiful when that happens. It will then mean that most retail traders are in buys, retail traders are the liquidity for the big institutions. And if you come across the COT, it will then be mostly sells like it is now, and then the market will melt and retail traders will be like, why the fuck did that happen? The reason why it happened is they have no fucking idea how to understand fundamentals, and they have no idea about these type of platforms which give you valuable information, okay? So, moving on, what I like to do with fundamentals is I like to go through each pair individually, except from Aussie, China, and New Zealand, okay? The reason for that, they're very closely correlated, blah, blah, blah. You know, if China's doing well, it will positively impact the likes of AUD, NZD, and if China's not doing well, it will negatively impact AUD and NZD. The reasons for that is a totally different video, all right? Let's just move on. So look, these here, right, you've got your Forex Factory, which everyone knows, okay? This is trading economics. Trading economics is essentially the same as Forex Factory. It's just 100 times better. You get far more information. The information comes out much, much faster. The reason why I don't use this for my overview, my weekly fundamentals, is because if I go to select countries, look, it's a massive pain in the arse trying to select countries from here, right? However, if I come to Forex Factory, it's actually very easy. The countries that I want are right here. You know, I don't have to sift around, and it's a lot. It's a lot less time consuming. So, for the first one, AUD, China, and NZD. Let's have a look at them together. If it decides to hurry up. Now, one of the things that's very important when you're doing fundamentals is you can have an economy which is strong, right? But you look at this week's numbers and they're really shit. That doesn't mean that you move an economy from a strong economy. Oh, the numbers are shit this week, I'm making it weak. Now, you need context when I say that, right? Yes, if there are poor numbers, you will see weakness during that week, but you have to look at the big picture if you're a swing trader or position trader, which I am. And it could just be a bad week. So you need pullbacks, right? Markets always give you pullbacks, but if the overall economy is still strong, you know, for you've only had one bad week and the rest of it's all been good for the last fucking 6 months, it doesn't instantly mean that the economy's fucked. It just means I've had a bad week, okay? So then I would just be allowing that, you know, to come back. I would keep it as strong or neutral, whatever. You don't just move it from week to week. You move it after a good few weeks. You've seen multiple changes. CPI continuing to drop, you know, week after week, month after month. PPI continuing to drop. Employment continuing to drop. Unemployment continuing to rise. You know, when you see these common themes, then you would move an economy / currency from strong to neutral, neutral to weak, and so on. But just because it has one bad week, I wouldn't be like, okay, I'm going to move it from this week to strong to weak. Yes, if you're an intraday trader, you need to look at that. You will see weakness within that week. But me as a swing trader, I already know in my mind, I can, you know, I've got in my mind, because I do this so often, every single week, every single day, I keep up to date. I already know exactly in my mind where I have positioned and placed all of these economies, you know, in the market cycle, okay? It's not too hard to do that. It probably takes, if you're just learning it, you could get to that kind of position within about 6 weeks, as long as you stick to it and you keep doing it, all right? So guys, finally, we're up and running now. Here we have, what you'll normally see is, I like to run through each one individually, right? Because look, let me just go back here. If you've got all this up here, and you're trying to go through it, you're looking here and you're mixing and matching. Oh, I've got this number here. What economy is it? And it's a disaster. It's a fucking nightmare. It's going to take you all day to get through that, right? So what I prefer to do is come down here, hit filter. You'll see it right here. I do each one individually, except from Aussie, China, and NZD. I do all of those together, okay? Because they're closely correlated. So let's see what we've got. What week are we on? You also want to make sure that you're not on this week, because we want to review last week, right? So just go up here, hit last week. Right, let's see what we've got. And I will break this down. We only need to look at the ones that we actually care about. Don't get bogged in by thinking that you need to know what every single piece of this does, right? You don't. There's only certain ones we look for. If you want to know which ones we look for, you can have a look here on my fundamental cheat sheet. And I've put this together for you guys. You will see it on the link below, and I've marked down every single thing here, what it means and which ones you want to look out for, okay? You actually don't need that, in all fairness, because if you click on the fucking folder right here, it's going to tell you that. But human beings are fucking lazy and they won't do it, right? So I've put together a form to try and spoon feed you the information the best way I can, okay? So let's have a look here. New loans has increased. So why is that a good thing? Why is that, bullish for the Chinese economy? Because if banks are giving out more loans, it means more people have more excess money. When people have excess money and they've applied for a loan in the first place, it means they want to fucking spend the money. If they spend the money, what's that going to do to the economy? It's going to stimulate the economy, which means it's bullish for the economy, okay? Or at least it's seen as being bullish. What else we got here? Business Services Index, 49.1. Shit. So very, very simple when it comes to services and manufacturing. Anything below 50, 49.9 downwards, is bearish. Anything above 50 is bullish, all right? Don't get confused that that's went from 49.0 to 49.1, that it's growing. Think, oh, that must mean bullish because it's more. No, it's not. If it's below 50, it's bearish, okay? US dominant trade balance, 102, okay, who cares? China trade balance. Now, this is very important here. Look, this is green, right? So when you don't know what you're talking about, when you don't understand how to interpret this, is what I should have said. When you come here, you're just going to look at that, right? We've all done it. I've done it. This is why I can say these things, because I have been there when I didn't have a fucking clue what I was talking about, okay? When you look here and you see that that's green, right? You're going to look at that and think, oh, it's green. That must mean bullish. Otherwise, it would be red. No, it's wrong. Look at previously. It was 1220, 1220 billion, right? Now it's 737 billion. So it's decreased. That's bearish. If you look at the previous and the actual now, it's bearish. So why is it green? It really annoys me when Forex Factory does this. It's green because they forecast it to be even lower, right? They forecast it to come in at 537 billion and it's came in higher than forecasted at 737. So they've put it green. So you're just going to look at green and say, oh, that's bullish, but it's not. Look at the previous. It's almost half what it was, so it's lost a shit ton, right? So it's bearish, okay? Monetary policy, that we don't really care about that stuff. It does have an effect, but it's too boring to really care about. GBT price index has increased, so it's positive for NZD. New homes still -8. GDP quarter on yearly has increased. Oh, it's the same actually. It hasn't increased. However, they anticipated it to come in less at 5.2. It remained the same at 5.4. So that's what we call sticky, right? It's not good, it's not bad, but it's sticky. So it's holding in there, okay? Industrial production, 7.7. Fantastic. That's bullish. So it's 5.9. Retail sales year on year is 5.9, up from 4%. That's bullish. Unemployment rate, 5.2, which is coming down. So that's bullish. If unemployment's going down, that's still bullish, but obviously it's 5%, it's quite a lot. Where are we? End of day CPI quarter on quarter has increased, so that's bullish, and it came in higher than anticipated. Now, the New Zealand economy is totally fucked, right? You are getting some good news just now, but there's absolutely not a fucking chance I would be putting NZD under the category of strong in here, right? Not a fucking chance. Employment change, employment has increased. So here is the reverse of what I've just explained about the green, right? If you look here, employment change, in Oz, it's red. You're going to look at that, if you don't know how to interpret it, and you're going to say, that's red, oh, that must mean bearish. No, it's not, it's fucking bullish. Why? Because if you look, it was previously minus 57k, right? It was previously minus 57,000. Now, it's positive 32.2k. That's fucking bullish. That's a massive jump into positivity. So why is it red? Because look, if you look at the forecast, analysts had forecast it to come in at 39.8. It came in less than forecast at 32.2. So Forex Factory has marked it as red, right? It's very important. They're sneaky little bastards. So it's very important to look at the previous was minus 57. Now it's positive 32. That's bullish, okay? For AUD. Unemployment rate has increased also 4.1. That's also bearish. However, again, look at what they've done. They've made it fucking green. So you think, oh, green, it must be bullish. That's good news. And you're going to get confused. Why is unemployment increased, but it's green. How is that fucking good news? It isn't fucking good news. The reason why they've done it is because they forecast it to come in at 4.2. And it is coming less than they forecasted it, i.e. better than they forecasted, so they've marked it as bloody green, okay? But if you look at it previously, it was 4.0, now it's 4.1, so unemployment is increasing. That's not good, okay? So when you're getting employment increasing and also unemployment increasing, that's kind of conflicting information, right? So that's just what we call mixed data. It's like, you know, when you take it from everything, it's just mixed data, right? Let's have a look. Yeah, so that's pretty much it, guys, on this. So what I'm going to do is come across here. Now, if you are a scalp trader or intraday trader, you may put down Aussie as being strong just now, right? And that would be fine. There's nothing wrong with that. Let's have a look on here. Me as a long-term trader, I wouldn't put it down as strong. My personal opinion is I'd put it down as neutral right now. Why? Because there's a lot of shit going on with China, which massively impacts Australia. When China's, because of the tariffs and stuff, right? When Chinese manufacturing and services and all this other shit are increasing, they have to buy all the base products from Oz. Australia is a predominantly mining country, right? So when China's production increases, manufacturing increases, orders increases, blah, 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 they then have to buy all the minerals, the tin, the copper, the nickel, the gold, blah. They buy it predominantly from Australia, right? They may have a couple more, you know, other places they trade with, but predominantly, you know, 80% comes from Oz. So if everything's going fucking positive in China and everything's expanding, then they're going to buy more shit from Oz, which is also going to drag Australia up with it, or pull Australia up with it, I should say, right? If it's the opposite, and they're getting hit with these trade wars and tariff wars and all this bullshit, and everyone's halting production, they're going to stop buying stuff from Australia, which brings Australia down. So you have to kind of think outside the box with this stuff, along with actually seeing these numbers, which may be positive at times as well, okay? You need to think, well, look, what's just coming around the corner, and you can anticipate it, right? It's not about predicting the future, because anything can happen in the markets, right? It's just about being open and thinking outside the box, right? What could potentially come? These numbers are okay, but what else is going on in the world right now, okay? And right now, we have got Trump in talks with China to sort this trade war. So thank fuck for that. Hopefully we get some good markets coming back. Let's have a look here, right? Before I tell you where I'm going to put this in strong, let's have a look here, Prime Market Terminal. Let's look here, sorry. And let me just come across smart bias. So Prime Market Terminal gives you a bias, right, for each pair. Let's have a look here. Fundamental, that you can scroll down, you can look at banking research if you want. It gives you tons and tons of data, right? And if we bring this back up just to make it easier on the eye, you can see that this one down here at the bottom says overall, and you can see the pair. USD is neutral right now, Euro bullish, GBP bullish, CAD bearish, AUD neutral, which is exactly where I was going to put it, neutral. NZD bearish, exactly, I was going to put it in weak. Japanese yen neutral, CHF neutral, okay? Now, for me, I actually won't be putting Euro into bullish, and this is where, you know, it gets a little bit, I don't want to say confusing, I will say conflicting, because it depends on which type of trader you are. You know, are you a short-term trader, scalping, day trader, in and out in the same day, or are you like me, where I like to enter a trade at a specific time based on area of value on the weekly time frame, and let that fucking thing run for 8 weeks, 10 weeks, 25 weeks. I will let it run until fundamentals change and tell me that things are about to move the other way, okay? You may come across times watching my videos where this says bullish, and I will be putting it in neutral, because I'm thinking in the bigger picture and what's happening, okay? This is just basically, this week we've got a bit of good news, markets are looking well, blah, 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 okay? So back here, the other ones are exactly where I was going to put it. NZD is definitely weak for me overall, and neutral, I'm going to put Oz. So Oz in neutral, NZD in weak, right? Now we come back. We are going to have a look. Now what you do now is you have a look next week before you switch your currency pairs, your economies. You have a look next week and just say, is there any big news coming up this week that we want to be aware of? Bank holiday today in Australia. When we've got trade balance, okay, we've got flash manufacturing PMI, we want to see that. Flash services PMI, we want to see that. Those are really good ones. I don't know why that's yellow, because we really like, you know, that's a good orange-red folder in my opinion. Credit card spending year on year, we want to see that. If people are spending more money on credit cards, it's stimulating the economy, right? If people aren't spending, then it's not stimulating the economy. See, when it comes to fundamentals, guys, it's fucking common sense. See, when you sit and think about it, it's fucking common sense, I'm telling you. Sometimes all you need is someone like me to explain this to you, and then you'll have that light bulb moment and go, this guy's right, it's fucking common sense, you know? That's pretty much it, all right? We've got PMI Wednesday, credit card Wednesday, and that's for AUD and NZD, right? Not massive news, but at least we know it. So now we're going to go back to last week. We're going to come up here to the filter, close off these, let's go to CAD. And now we do one by one, so it's much faster now, right? Sorry, it should be last week. What have we got for CAD? Let's have a look. Wholesale sales month on month. So when it comes to month on month, we have a look, but we don't really care. What we care about as a long-term trader is quarter on quarter, and especially year on year. Year on year tells you if economies are growing overall or if they're contracting overall, okay? Year on year is my fucking favourite. Housing stats, 214k, 221k. Now look, see this here? See if you're ever like, God, what is housing starts, not starts. What is housing starts again? Well, it's basically mortgage approvals and stuff, right? But if you ever forget what something is, don't flap. Look, press the little folder and it will tell you. Annualized number of new residential buildings that began construction during the previous month. It tells you exactly what it's for. Why do traders care? Blah, 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 blah. You know, it's all dead simple. So if housing starts are up, it means new houses are being built, you know, potentially by the government or by private companies. If new houses are being built, it means, you know, you've got tons of employees on those jobs working, which are getting a salary. Plus, it also means when the houses are being built, people are going to get mortgages to then buy those houses. So when that's increasing, it's seen as bullish. It's seen as a positive for that particular economy / country, right? That's why we like to have a look at housing starts. This has decreased, and it's even, they thought it was going to increase and it's massively decreased, okay? So that's bearish. See, excuse my finger, CPI month on month is down, bearish. CPI year on year is sticky, hasn't moved. Trimmed CPI year on year is down, bearish. Common CPI year on year is down, bearish. Manufacturing sales month on month is down. Do not be fooled that it's green, okay? Look, it's 0.2 in green. Previously, it was 1.6. Why is it green? Because they thought it was going to come in at minus 0.3, and it came in at 0.2. So it's given higher than the forecast, okay? However, it's much less than before, so that is bearish. Do not get caught out of that. Bank policy, BOC statement, overnight rate. So they did not cut rates. Press conference, foreign securities, blah, blah, blah. Okay, so all you're doing now is you're coming here, week, CAD. I think last week and the week before, I had CAD in neutral, but we've had so many weeks of bad news, I've now switched it up and banged it into a weak economy, okay? Also, point to note, I almost forgot there, the Canadian economy is massively pegged to oil, right? So if oil prices are going up and it's strong, then the Canadian dollar will get stronger. If oil prices are melting and coming down, then in terms of Forex, the Canadian dollar is going to show weakness and come down as well, okay? So very important to remember when it comes to trading the Canadian dollar, whether it's buys or sells, always have a look at the data, but also have a look at oil and see where oil price is going. Is it looking to come down, blah, 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 all right? Now, let's have a look, sorry. Next week, this week, do we have any news? We've got IPPI, yep, RMPI, core retail sales, month on month. We still want to see them, but yeah, we don't have a lot of news this week, okay? But we know that the Canadian economy is weak. Now we're moving on to CHF. Now, CHF, for those of you who watch my videos all the time, you know that I predominantly just put CHF in neutral. Why? Because it's never really affected by this stuff, right? Trade balance, PPI. It doesn't really affect the CHF. So when do you look to trade CHF then? For me personally, I choose to trade the Swiss franc during times of market sentiment switch. So when the market sentiment goes from being risk on, I should say, to risk off, then I will look to trade it. When markets go to change back from risk off periods back into risk on, then I will look to trade it. If markets are just constantly risk on for a long period of time, blah, 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 I generally don't trade the CHF, okay? I just wait until there's a shift in risk on, risk off sentiment. Market sentiment is another video on its own, okay? I'm not going to waffle on about it too much on this. So, I always put CHF here, right? It's always neutral for me. Obviously, there are times when it's strong, but like I said, it's based on market sentiment change, okay? And then I'll move it. But I don't move it, I just know in my mind that, okay, it's strong at this point because market sentiment has moved to risk off, and CHF is a risk off currency, okay? It's a risk off safe haven. So is Japanese yen, so is NZD, so is the likes of gold and silver, okay? Moving on, boys. Euro. It's much faster when you get down to doing one pair. So last week, let's have a look. What did we have? Excuse my finger. German WPI month on month has, I'll come over here, has dropped. French final CPI month on month is sticky. Economic sentiment has dropped massively. Industrial production month on month has increased slightly. Economic sentiment has dropped massively. Current account dropped. Final core CPI year on year, sticky. Final CPI year on year, sticky, hasn't moved. Bonds have decreased. German PPI month on month has decreased. So it's just fucking bearish. What we got? Italian trade balance. So Italy is actually doing quite well. However, when it comes to doing the fundamentals in the Eurozone, we look at all of them. So if Italy and Spain are there and it's like a year on year CPI, we will take into account that information, right? However, we don't really give a fuck. The ones that we care about are Germany and France. They're the main big players in the Eurozone, which have that kind of power to sway it to bullish or bearish, right? If Germany and France are bearish, Italy and Spain coming in with good numbers is not going to fucking change anything in the Eurozone, okay? But France and Germany do change things up. What else have we got here? Yeah, that is it. So if you want to look at that, right, the way I normally do this before, just now I'm doing it in a manner to teach you, right? But when I'm just sitting at home, I can get through this in fucking 2 seconds by literally looking at it and being like, bearish, sticky, bearish, sticky, bullish, bearish, bearish, sticky, sticky, bearish, 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 bullish. So overall, that's again bearish, and that is weak, okay? That's now a few weeks where the Eurozone has been weak, okay? See, when you do it like this, I'm telling you, it's fucking great, right? I'm telling you. Next week, what have we got? This week, sorry. We have bank holiday. So it's a bank holiday. Markets will be pretty shit today. Well, we're going to cover that, right? I never trade on a Monday, and I never enter a trade on a Friday. I'll explain my reasons for that. Loads of people have their own reasons why they don't trade on Monday, right? It's just something I've picked up over the years. There's usually low volatility on a Monday, right? And it's shit. It's just back and forward, and it's just a bit of a mess, I generally find, right? Also, I just like to see how markets, kind of play out on a Monday to then line it up for the rest of the week, the Tuesday, Wednesday, Thursday. Now, the reason why I don't enter it, if I see a trade on a Wednesday and I'm like, that's nice, I'll take it and I'll let that run for weeks. I'll let it run over the weekend and I'll let it run for weeks and weeks and weeks before I close it, right? However, if it gets to Friday and I'm like, should I enter that? I won't take a trade on a Friday. I won't enter it. Because if you enter a trade on a Friday, depending on if it's a buy or a sell and the actual pair that you're trading, you may have to pay swap fees over the weekend. So 1, you've entered the market on a Friday. 2, you're going to pay fucking swap fees and you're going to get trapped in over the weekend. 3, if something happens over the weekend, like a war kicks off between, North Korea fires rockets into South Korea, just something unimaginable kicks off, like Russia, Ukraine, blah, 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 over the weekend, it's going to have a fucking massive effect on the market. So you're potentially going to get wiped out on the Monday, right? If things go against you because of something that's happened, a geopolitical event, a hurricane, anything that's fucking happened that's going to affect the market. So then you've got that, right? And then number 4, the price on Monday or Tuesday is not going to be that much different from what it was on the fucking Friday. So if you are going to enter it on the Monday, I wouldn't, but if you are, And then on the Tuesday, the price isn't going to be too different, especially for me because I trade on the weekly time frame, right? If you're trading on the 15-minute and 30-minute, it's going to be massively different. It's going to look like, 20 candles this size plus, But when you look on my weekly time frame, it's literally going to be that size. So it hasn't moved for me. Do you know what I'm saying? So you need context as well, okay? And yeah, that's why I don't do it. I just wait until the following Tuesday to see where it's going. All right. Let me see, where are we? Yeah, so look, we've got French flash manufacturing PMI, services PMI, German, yeah, we've got tons of PMI next week. What else? That's pretty much it, all that we care about. Okay, so we've got PMI on Wednesday, right? Moving on. GBP. Always, yeah, it's back to last week. Okay, that's fine. So let's have a look. Right move HPI, so that again is just mortgage approvals, right? And that has increased, so that's bullish. This is where I go through it. Bullish, 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 sticky, sticky, bearish, bearish, bearish. Now, this is a good one here. You will note that core CPI year on year has decreased from previous, right? It's went from 3.5 to 3.4, which is bearish. However, a key point to note here, guys, is that if you look at the forecast, 3.4, they already anticipated it. You might hear people say, oh yeah, it's already priced into the market. It means they've already, oh yeah, here's the numbers, that's probably going to drop to about 3.4. So it's called already priced in, okay? And if you look here, yes, it has dropped from 3.5 to 3.4, which would be bearish. But probably if you were looking at the market during this, normally CPI gives you big moves, right? If you were looking at the market during this period, look, you've got core CPI has dropped by 1 as forecast. You have got, what one's this? RPI year on year, which has dropped by 2 points, but it's in line with forecast as well, right? So because it's already been forecast, already been priced in, you may look at that and the market barely moves. And you're like, well, why is it not moving? These numbers have changed. Well, it's not moving because they already anticipated it. It's already priced in, a month ago. You know what I'm saying? So that's why. But if let's say that they would forecast that to come in at 3.2 and it ended up coming in, 4.1, the market's gonna fucking fly because it's like, holy shit, we never thought that was gonna happen, and then the market will react. Okay, so I hope that gives you a bit of understanding. So let me go through this again. Bullish, 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 sticky, sticky, bearish, 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 bearish but anticipated, and bullish. Okay, so that there between the bullish and bearish, that's just mixed data. I will be, for me, I'm going to be keeping pound in, hold on, I'm going to be keeping it in neutral just now, okay? Now, like I showed you, if you come across to Prime Market Terminal, it's saying here, pound is looking like bullish just now. Now, it very well could be. However, you have to remember this right here, this is intraday stuff. This is the strength of that particular currency right now in this moment. I'm a long-term player, right? I'm thinking about what's the economy like as a whole, piecing all of these pieces of the jigsaw puzzle together for the bigger picture, right? So it's not that this is right and I'm wrong or vice versa. It's just you need context. These guys are telling you that pound is bullish right now. Now, even though I have put pound in neutral, it very well could be bullish on the charts today, tomorrow, this week. It very well could be, and I keep that in my mind. But I know that overall, it's not very strong right now, especially with a shit stain like Starmer at the helm, okay? Now, let's have a look. Last week, let's have a look next week. This week, sorry. We have got flash manufacturing PMI, we've got flash services. So every single country, right, has manufacturing and every single country has services. But not every country is a manufacturing country per se, and not every country is a services country per se. Excuse me. So for example, But the British economy, we have manufacturing, but we're not a manufacturing country. You know, it's not our forte. We're a services providing country. So we always look to see services above 50. And if manufacturing comes in above 50, that's fantastic. We'll fucking take it all day long, you know. However, we don't expect manufacturing to be over 50 in the UK because we're not predominantly a manufacturing country, right? Neither is France. France is predominantly a services country. Japan, Germany, USA, etc. We would like to see them with higher manufacturing, right? In China, etc. Because they are manufacturing countries, okay? What else we got here? Yes, so we've got PMI this week. I love a bit of PMI. Retail sales month on month. That's pretty much it, okay? So we don't have that much. What else we got now? The Japanese yen. We don't even have to look at that because the yen is fucked. Where are we? Sorry, I'll come back. So revised industrial production is 2.3, bearish. Now Japan is a manufacturing / production, industrial production reliant country, okay? So when that's dropping, that's not fucking good news. Core machinery orders month on month has increased. That's good news. It went from -3 to +4. Fantastic. Trade balance, they are in a deficit, a minus. What does that mean? Well, that means they are importing more than they are exporting. Now that's not good because Japan is a manufacturing country, which means when they're making shit, they want to be fucking exporting it, right? And making dough. So if the trade balance is at a minus, a deficit, it means they're not exporting a lot. It means that they're producing all this shit and they ain't exporting it. Nobody's fucking buying it, you know? And the stuff that they're importing more, which means they're spending more money than they are making, which is not good for the economy. That's bearish, all right? National core CPI has increased, finally, from 3.0 to 3.2%. So happy days. Again, for me, I mean, that's slightly mixed data, but the Japanese economy is shit, right? What have we got this week? We've got core CPI, it's looking to increase slightly. We've got flash manufacturing, it's still forecast to be below 50, so that's going to be bearish if it comes in. Japanese economy is still shit. You could argue that the Japanese economy is neutral. You absolutely could. I think I had it neutral last week, but we've had such bad news for such a continuous long period of time, I'm just going to fucking put it in weak, all right, because it's shit. Last, but by no means least, the USD. So, last week, what have we got? So, Empire State Manufacturing, although it's still -8, it's bullish because it's massively increased from -20 to -8. That's a massive increase. Import prices month on month, -2, bearish. Core retail sales month on month is bearish. Don't be fooled that it's green, it's dropped. Retail sales month on month is bullish, massively bullish. Capacity utilization, bearish, bearish. Bearish. Housing market index, bullish. Crude oil, that's fine, ignore that. Unemployment claims has decreased, that's bullish. Philly Fed manufacturing is bearish. Building permits, bullish. Housing starts, bearish. Natural gas, well, we don't care about that. So for me, guys, I am keeping, and obviously we've got the trade wars, the tariff wars on right now, right? I'm telling you right now, I am keeping USD in strong. Now, I know in the short term it might be weak and blah, blah, blah. I'm actually not trading a lot right now, and because I'm such a long-term trader, I'm not jumping in all these little violent moves. I am someone who sits back, especially because I trade a managed PAM account. It's got tons of clients on there. I'm not a fucking idiot that gambles other people's money. And you will see this if you jump across to our YouTube channel, The Trading Guys. Hit this little alarm bell, because whenever I'm maybe in the office or even if I'm at home, if I see a trade that I'm going to take, I'm going to be trading it live on here, right? So you can physically watch me trade. I leave the comments open, so you can ask me, Ryan, what made you enter that there fundamentally? Ryan, how did you know to put your stop loss here? How did you know that was your take profit? You know, you can ask me all these questions and I will tell you the answer, all right? So The Trading Guys, jump across there. But, where is that? Yes, when it comes to the USD, I've got it in strong, guys. It is still a fucking massively strong economy. Everything's wild right now, but this is my layout. So in the end, strong USD, NZD, strong USD, weak NZD, CAD, Euro, Japan, neutral, Oz, CHF, GBP. That is my setup, as in the whole bigger picture, right? Some of them will match the likes of Prime Market Terminal, and some of them won't, and that's absolutely fine. Because this, like I said, this is the intraday stuff, okay? It's not that they're right and I'm wrong, or I'm right and they're wrong. Absolutely not. It's just you need the context, right? Context is extremely important when it comes to trading. So this, I mean, look, if you want to have a look at the pairs here, this is GBP USD. For any of you who've watched my older videos, see when you see this here, right? You're like, look, bang, how is it fucking hit here and went? You know, here's the next area. It just comes in all the time. It's phenomenal. Now, it's no accident. These are areas of value. Areas of value are fucking phenomenal when it comes to trading, okay? Phenomenal. Again, that's another lesson on its own. I actually don't really teach that on my free stuff because, look, we have a Discord channel and these guys actually pay for mentorship and actually knowledge. You know, on the YouTube and stuff that I do for free, I give away free information, right? Information is not the same as knowledge, guys. And these guys here, the students, they pay for knowledge and they pay for genuine mentorship every day. I don't just post something and say, right, fuck off, go and do it by yourself. They can ask me questions. I also jump on here and I do live videos and everyone can come and watch me and we can have a discussion. And I even do role plays. So let's say I jump on today, right? And I'm like, lads, I can tell right away from my method there's absolutely fuck all I would trade right now. Does anyone want to jump on and do a live and we'll do role plays? And we'll be like, yeah. So I will then give them scenarios like, okay lads, let's have a look at pound USD. Looking at it now, would you be looking at buys or would you be looking at sells and why? You know, and they'll tell me, okay, where would you put your stop loss? And we'll run through scenarios, right? So we give them genuine mentorship. Also, whenever I've entered a trade, I also give them the trades, right? And if you look, where are we? If you look here, trading results, look at all of our guys' results, copying our trades and learning by themselves, all right? It speaks for themselves. All these guys post this themselves, lads, all right? It's fantastic. So we offer the full-blown trading. However, if you would just like free information, because I have been there, I have been a fucking brokey before with not a pot to piss in, and you see all these courses for 500 quid, 2 grand, and you're like, fuck, I don't have any money, but I want to learn. I've been there. This is why I actually do this shit, because I want to give back. I remember being fucking skint and it was horrible. So here we've got tons of free information for you to get involved in, all right? If you would like to join the trading guys, mentorship, jump across to www.thetradingguys.com and we can chat about it, okay? But anyway, look, I hope you have found all this type of information beneficial for you, all right? If it's going over your head just now and you're kind of new to it, don't worry, all right? This happens, this takes time. There's no, it's not a get rich quick scheme. I know it's hard when you look at fucking Instagram and you're seeing all these fucking idiots, you know, flashing the cash, driving stupid fucking cars that they've rented for an hour for a photo shoot and all that shit. I fell for all that shit before in the beginning. However, if you find this useful, don't forget to drop a like, subscribe and comment below. If you guys, one last part here, if you guys have any questions that you would like to ask or you would like me to cover something in any future videos, like, Ryan, can you explain what the trade balance is? Or Ryan, can you do a video on the risk on, risk off sentiment? Put anything you want to learn, you'd like information, put it in the comments below. I read all the comments and I will then make it a priority to do content on that, and I'll answer your question via videos. Okay guys, see you soon.